Hello everyone, warm welcome to Testbook Super Coaching. My name is Madhav Sir. I welcome you all in a very important session, and that too in a very important series. So as you all know, we have started a series named Basics of Finance. And as I mentioned that first we will be completing Basics of Finance, then we'll talk about these concepts which we call it as advanced level, advanced concepts of finance, and then ultra advanced concepts of finance. This series will help you to understand the basics of finance, which will help you to answer most of your queries related to your newspaper reading. That means whenever you will be reading the newspaper, you will be in a position to answer or to understand most of the news which are available on the newspapers itself. So today we have a very important concept to start with, and the name of the concept is Indian financial market. So before I start the discussion, a very simple question is, what do you mean by the term financial market? You need to understand this point very carefully, that what is the meaning of financial market. So please pay attention on the screen. I'll explain you the term and then we will be moving ahead. Okay, so the moment we start our discussion, the first thing from where I'm going to start my discussion will be that, sir, whenever we talk about financial market, the first point is, so what do you understand by the term financial market, or how you define the term financial market? What will be your answer? See, whenever this term comes in front of us, that is financial market, we must be very much clear with two terms. First is market, second is finance. So what is financial market? So what is basically financial market? Then my answer to this particular question is, so market is a place where trading of goods and services is done. Simple. What do you understand by the word market? So market is a place where trading of goods and services is done. And whenever we talk about financial markets, a financial market is a place where trading of financial instruments is done. Are you getting my point? What is market? So market is a place where goods and services are sold out or purchased. Simple. Now, if I say financial markets, a financial market is a place where sale and purchase or trading, or I would say buying and selling of financial instruments is done. That is basically termed as financial market. It's a very simple form to understand the term financial market. Now on the other side, so financial market is not only for the sale and purchase of financial instruments, but also it's a place where financial services are provided. What kind of financial services? For example, I own a company and I want to expand. But unfortunately, I don't have the appropriate funds with the help of which I can expand my operations. So what I can do, sir, I can reach to the financial market. And the moment I reach the financial market, I will be selling my financial instruments against which I will be raising the capital. Because I'm issuing you the financial instrument, you will be giving me the funds. So for me, financial market is a place where I'm selling my instruments. That's good, but it is providing me a service, that is fundraising service. Are you getting my point? Are you getting my point? Now, if someone asks you how we define financial market, sir, we divide financial market into two categories. And these two categories are basically on the basis of financial instrument. Yes, you heard it correct, that financial market is defined, or the two types of financial markets are defined on the basis of financial instrument. Now, if I would have been a student, I would ask my teacher that first telling us about the financial market, please tell us about financial instruments. So keeping that curiosity on, I would say, what is financial instruments? A financial instrument is an instrument which help you to invest your funds, or it is an instrument which helps you to earn profit or to earn returns on your investment. So financial instrument is defined on two bases. First definition is on the basis of type. We define the financial instruments on the basis of type. And in case of type, we have two. The first one, we call it as equity instrument. The first one, we call it as equity instrument. And the second one, we call it as debt instrument. Second one, we call it as debt instrument. So what is the difference? Sir, equity instrument means an instrument in which investment is done. Equity instrument means an instrument in which investment is done where return is not fixed, and return will depend on the company's profit. For example, if you have invested the funds and if company has witnessed a profit of 10%, then on your investment you will be earning a profit of 10% same. What is debt instrument? So debt instruments are the instruments with the help of which you are basically lending the funds. You are not investing. You are lending the funds to a company or to the borrower, and in general or in most of the cases, fixed return will be received. In most of the cases, you will be receiving a fixed return. That is known as debt instrument. Now, if we move on to the second side, so second side is we define the financial instrument on the basis of their term. The financial instruments which are valid or which holds the maturity up to 1 year, that is short-term instrument. That means an instrument in which you can invest up to 1 year. Its maturity is up to 1 year. That is known as short-term financial instrument. And the second one, we call it as long-term financial instrument, which is valid for more than 1 year. Which is valid for more than 1 year. Is it clear? Is it fine? Is it clear? Is it fine? Chalo. Now let's move on to the next term. So now if I define the financial market, on the basis of financial instruments, then what will be my answer to this particular question? So my answer to this particular question is we classify the financial market into two categories. On the basis of what? So on the basis of two things. First is on the basis of financial instrument. So first is capital market. So what is a capital market? So capital market is basically a place where long-term financial instruments are traded. So those instruments which possess their maturity of more than 1 year, if they are traded, that market is termed as capital market. On the other side, money market. So money market is a place where short-term instruments are traded. That means all those instruments which possess the validity up to 1 year. Is it clear? Is it clear, everyone? Is it clear till this point? Okay. Now moving ahead. The next point is, sir, capital market and money market, they are further categorized into two categories. It can be termed as capital market can be divided into two. One is termed as equity market. So if a market in which equity instruments are traded, that will be equity market. And if debt instruments are traded, then it will be debt market. Secondly, these two markets can also be classified in two more categories. One we call it as primary market and the other one we call it as secondary market. And this term is more relevant to capital market rather than money market side. But yes, in money market side also you can define these terms, but This categorization is more relevant in case of capital market. So what is primary and secondary market? So primary market is a place. Primary market is a place where financial instruments are issued directly, or financial instruments are issued by the issuer directly. And secondary market is a place where financial instruments are traded within the public. What I'm trying to say, if I explain this on the next slide, then I would say, whenever we talk about primary market, how we define the word primary market? So primary market is a place. Primary market is a place where financial instruments are issued to the public. For example, if a company, for example, if I talk about a company, for example, if I talk about a company, and if that company is issuing the shares, and you and me, we are purchasing those shares, then that transaction will fall under the category of primary market. That will fall under the category of primary market. But the moment these shares which have been purchased by the public, if these shares, they are traded within the public, that is known as secondary market. That is known as secondary market, where financial institutes, they are not, or I would say the financial instruments, they are not issued by the public, rather it is traded within the public alone. Rather, it is traded within the public alone. Rather, it is traded within the public alone. Is it clear now? Is it clear? Any doubt, guys? Is it clear till this point? I hope no doubt till this point. Please reply. I hope there is no doubt till this point. Do reply in the comment section, please. Okay. Now let's move on to the next point. What does the next point say? So the next point say, whenever we talk about financial market, as it is clearly mentioned, in case of financial market, what all are the components, and if I directly focuses on financial market, then we know that in case of financial market, we have two markets. One is capital market and the other one is money market. Capital market is a place where financial instruments with long term are traded, and here the financial instrument with short term are traded more than 1 year, less than 1 year. Next point is financial instruments. So when we talk about the financial instruments, we have the financial instruments which are categorized into different categories depending upon their operation. So if I define those types of instruments, then I would start my discussion from here, where I would say, in case of equity instruments, we have two types of instruments. One, we call them as equity shares. One, we call them as equity shares, and the other one, we call them as preference shares. Obviously, in RBI Grade B syllabus, detailed coverage of preference and equity share is required, but in this session, as we call it as basics of finance, I will be giving you the basic understanding of the same. So in this case, I would say equity shares means the shares where I can use a word equal, which means if you are investing in a company, you will be earning as per the profits which are earned by the company, or you will be earning equivalent to the profits earned by the company. We call it as equal format. On the other side, if I talk about preference shares, so in case of preference shares, we witness prefixed. In case of preference share, we witness prefixed returns, that means returns are prefixed. Returns are prefixed, but in case of equity share, you enjoy the voting rights. You enjoy the voting rights, but in case of preference share, you may or may not enjoy the voting rights. Generally, we say no voting rights. There could be voting rights, not always. In some exceptions, there could be voting rights, but in general, we can say there are no voting rights. And equity shares as well as preference shares, they are defined in different they have different types on the basis of their utilization. Even we have different methods which are used in order to calculate the value of equity shares. But whenever you go for a share market now, before I discuss with you what is share market, what is secondary market, what is stock exchange, I would like to discuss a very important term with you. That is face value. That is face value of a share. Then we have book value of a share, face value of a share. Second, we have book value of a share. And third, we have the market value of a share. Third, we have the market value of a share. Now the question is how we define them. Then my answer would be, sir, in case of face value is the price fixed at time of issue. It is fixed at the time of issue and it's not going to change. It's going to remain fixed. What is book value? So book value basically means total asset of the company minus total liability of the company divided by total number of shares of the company will give us book value. And we know that asset value of the company as well as the total liability of the company, it changes. It changes over the period of time. It obviously changes over the period of time, and which will undoubtedly change the book value. Of the share. Market value basically means market capitalization divided by number of shares, which means if you want to purchase a share in the share market, the price at which it is available in the share market is known as market capitalization divided by number of shares, or we say company's market capitalization is calculated by the formula number of shares into market value of the share. So this is the price at which you deal in the share market. This is the price which is generally mentioned or which is calculated with the help of the balance sheet, and this is the price at which the issuing of the share is done, which is basically related to, or which is basically termed as face value. Face value has a more importance in case of bonds or other debt instruments rather than shares, but it is more important in case of bonds as well as, for that matter, this term is important in case of preference shares as well. Is it clear? Now, what is secondary market? So, secondary market is a place where shares which are issued by the companies, they are traded within the public. For example, a company named X issued its shares openly to the public, obviously in primary market. Once the issuing is done, then those issued shares are purchased by you and me. That means they are purchased by public, and now these shares are traded within the public. So the market where shares are traded within the public is known as what? That is share market or secondary market. Now, if I give you a very simple example, let's suppose you want to purchase a car. And if you purchase a brand new car directly from the showroom, and if your friend is purchasing the same car brand new from the showroom, you both will be purchasing the car at same price because that price is fixed by the company. This is primary market where shares are issued directly by the company and they are purchased directly by the investors. But what is secondary market? When you purchase a second-hand car, now let's suppose you purchase a second-hand car X of X model, and your friend has also purchased the same car X of X model only, but the price would be different depending upon from where you have purchased it, and even the other services which you have received against those purchases may be different. So that is what is share market, where trading of second-hand shares is done. If you want to avoid any kind of disparity, then you go to Cars24 and many other organizations where price of the car is pre-decided and you get a very little chance to directly negotiate with the customer. That is stock exchange. So stock exchange is a place where seller sells the share, buyer buy the share, but the negotiation of direct negotiation of buyer and seller is not allowed in case of stock exchanges. In India, we have the oldest stock exchange and the largest one, that is BSE, and the second important is National Stock Exchange. We call it NSE. Now in the next session, I will be discussing in much depth about stock exchanges. I'll discuss much about merchant bankers. I'll discuss more about derivatives, mutual fund companies, and many more things. So stay tuned. Don't forget to subscribe the channel if you're landing on this channel for the very first time, and do like and share the video so that more and more students are aware of the quality sessions which are provided in the series named Basics of Finance. Thank you so much. We'll catch you soon. Bye bye. Take care. Good luck.